So I know Wall Street very well, but I also know tech and Bitcoin very well. And I think both of these guys underestimated the impact that this ETF would have. And I still think we underestimate it, right? So I think the Bitcoiners felt like, well, it's not your keys. It's these guys are going to just take your Bitcoin. It's not real Bitcoin. You shouldn't. It's not going to amount to anything. It's not really interesting. And in fact, Lynn Alden and I got in a little online fight because she said it's like the least interesting thing that's happening this year. I'm like, Lynn, I'm sorry, you're completely wrong. It's the most interesting. It's the most important and the most interesting thing that's happening.
Bitcoin's enormous potential for growth and rising role in transforming the world of finance are being driven by increased adoption, technological innovation, and strategic investment. The ability to disrupt existing processes and generate new opportunities attracts interest. For expert insights, we turn to Fred Krueger, a seasoned software entrepreneur and Bitcoin supporter. Fred Krueger expressed his rising belief in Bitcoin's future, driven by the Bitcoin ETF. He discussed Bitcoin's outperformance, diversification restrictions, skepticism of crypto exchanges, and the need to understand both Bitcoin and Wall Street, with an emphasis on Bitcoin's enormous growth potential. His belief in Bitcoin has progressively increased since 2019, aided by the Bitcoin Exchange Traded Fund, ETF. The ETF addressed adoption concerns by allowing traditional brokerage account purchases, bypassing digital wallets and exchanges. Krueger further highlighted that investors distrust Coinbase and Binance, preferring established institutions. Krueger questioned Larry Fink's understanding of Bitcoin, claiming Fink sees it as an introduction to tokenization, demonstrating constant misconceptions. To further explore Fred Krueger's thoughts on Bitcoin's potential, let's watch more clips from the interview below. Please remember to like this video, subscribe to our channel, and enable notifications. Thanks for joining us again. Enjoy the video.
I would say starting in 2019, I really believed Bitcoin was it. But that I got more and more convinced from 20 to now, really, about that. And sort of my conviction level just keeps on going up. It never goes down, right? One of the things that really convinced me was this ETF, right? Because when I saw the ETF, I realized that we finally had solved the use problem, right? Because we have all these people who wanted to buy Bitcoin before, but they just couldn't deal with wallets and storage. And they also didn't want to deal with exchanges like Coinbase or Binance. A lot of people that I know, they simply are not going to trust Coinbase with their money. They don't really want to wire $1 million to Coinbase. It's just not something they're going to do. They might wire $100 or $1,000 to Coinbase and play around. But, they view that their real money is going to be in, Goldman Sachs or Morgan Stanley or Merrill Lynch. And, for them to kind of go the extra step to, I'm going to move this money to this very untrusted startup-y type thing called Coinbase, it's too big of a jump for them, right? And so when I saw this ETF, I'm like, oh my God. So this is going to totally solve it. All right. This will solve it because all of a sudden, I'm not saying they will want to buy it, but at least they can buy it, right? At least there's a way now that they can go to their regular brokerage account and they can buy it, So I know Wall Street very well, but I also know tech and Bitcoin very well. And I think both of these guys underestimated the impact that this ETF would have. And I still think we underestimate it, right? So I think the Bitcoiners felt like, well, it's not your keys. It's these guys are going to just take your Bitcoin. It's not real Bitcoin. You shouldn't. It's not going to amount to anything. It's not really interesting. And in fact, Lynn Alden and I got in a little online fight because she said it's like the least interesting thing that's happening this year. I'm like, Lynn, I'm sorry, you're completely wrong. It's the most interesting. It's the most important and the most interesting thing that's happening. So that was from the Bitcoiners' perspective, and then from the finance perspective, it was sort of even the most bullish of the the prognosticators, people like Eric Balchunas of Bloomberg were like, well, I think high end we could see $15 billion worth of inflows. That would be like an amazing result. Well, we've vastly exceeded that, right? And so I think that they, even till now, they still don't understand what they've got with this ETF. And I don't think Larry Fink understands what he's got. He's sort of thinking, well, I'll do Bitcoin and then I'll do tokenization next. That'll be really big. So I don't think they understand Bitcoin fundamentally. And I think you really have to have both angles to understand it. And I'm just, that intersection of that Venn diagram with, people who understand Bitcoin and people who understand Wall Street is very, very narrow. So these don't intersect much. The problem I think a lot of young Bitcoiners make, and is if you don't have to sell your Bitcoin, if your Bitcoin's in, let's say you're working and you've got some money coming in, and you could be 100% of what you have as investable capital in Bitcoin, right? The problem is a lot of young Bitcoiners, they go in, they are 100% in Bitcoin. Well, then they get in a car accident. Well, the problem is they get in the car accident in March of 2018. And the problem is now they have to sell their Bitcoin at the absolute worst time, right? And so you don't want to be in that situation. You don't want to be in a situation where you're forced to sell at the absolute worst time, right? And, there's all this math and theory and stuff. And it sort of says you need to have some buffer.
Fred Krueger noted Bitcoin's outstanding performance, which outperformed gold and other currencies. Power law research demonstrates Bitcoin's rapid growth, with a power law of 5.7 versus money and 4.9 versus gold. Despite its traditional status as a safe haven asset, gold's performance during certain periods of market turmoil has not consistently delivered the expected stability or gains, suggesting that its effectiveness as a reliable safeguard may be overstated. Despite its traditional status as a safe haven asset, gold's performance during certain periods of market turmoil has not consistently delivered the expected stability or gains, suggesting that its effectiveness as a reliable safeguard may be overstated. On the other side, Bitcoin's enormous addressable market, which includes global money and fixed income, fuels its potential. Fred Krueger noted Bitcoin's modest market share of about 1 trillion versus 900 trillion global assets. He urged for focused Bitcoin investment, citing the smaller markets and unclear futures of competing cryptocurrencies. Let's go back to the interview and watch more clips to gain insights from Fred Krueger.
There's a lot of math behind the power law of Bitcoin versus gold. And Bitcoin is pretty much outperforming gold, and in the same way that it is outperforming fiat. The power law versus fiat is 5.7 power. The power law versus gold is 4.9 power. Gold's not that much of a hedge, really. You think it is. You think you're diverse. I think one of the problems that everybody has is this overbelief in diversification. Bitcoin versus gold, that's one. Not a lot of people who are Bitcoiners do tend to diversify into gold. I think that's probably a good thing. It's more gold people who tend to go into Bitcoin, right? So I bought my gold obviously way before Bitcoin was invented, right? But other people who are gold bugs like Larry Lepard, actually have discovered Bitcoin, and they've sort of moved 50-50 or close to it, So other ones, obviously like Peter Schiff, just have resisted. They've resisted. Yeah. But I think the other thing is, there's this belief that you need to diversify in crypto. So, there's a lot of people who believe that, well, I can't put all my eggs on Bitcoin. I have to put I have to go 50-50 ETH in Bitcoin. And I think it's a huge mistake, but not a terrible mistake, because even if you have 50% Bitcoin, you're going to do fine. But it's suboptimal. I don't think I don't think you're getting anything by diversifying into Ethereum or Solana or any of these other coins. I honestly think it's a negative. You're wasting your time, and you're in the end you're going to have suboptimal returns, in my opinion. I'm not sort of massively against these things, but I just think that you're going to underperform Bitcoin because ultimately the reason I say that, let's just take the very long term, right? So what is Bitcoin really? The addressable market for Bitcoin is money, right? It's money and fixed income. So it's all of bonds, it's all of money, M2 in the US, the same in Europe, the same in China, everywhere else, right? There is, $100 trillion plus $200 trillion worth of bonds and M2, right? 200 trillion. So we're at a couple percent of that right now. If you look at world assets, including real estate and everything else, there's like 900 trillion. So, Bitcoin's 1 trillion. So it's just a tiny part of its addressable market, right? Now, if you look at the addressable market for things like Solana, Ethereum, you name it, whatever new one comes, and there will be new ones every month. There's going to be a new layer one of some kind. We have no idea who's going to win this fight. It keeps on changing, is it Ethereum? Is it Ethereum layer 2s? Is it Solana? Is it SUI? Is it APTA? I don't know, right? But all I know is that market is a much smaller market than the market for world money. That's a market for, a distributed database layer for smart money.
Tether's USDT stablecoin has reached a historic $120 billion market capitalization, which reflects a potential upward trend in the crypto industry as it bridges fiat currencies and digital assets. This milestone suggests investors are stockpiling stablecoins in preparation for crypto investments, possibly sparking the next Bitcoin boom. Fred Krueger has noted growing distrust in crypto exchanges, with investors favoring stable assets like USDT for liquidity and traditional institutions for security. Historically, October has been favorable for Bitcoin, with average gains of 21%, following a similar pattern in 2020 when Bitcoin surged 27% in October and 42% in November. Tether's recent surge also aligns with a Bitcoin rebound, as 1.3 billion USDT was issued in just 5 days last August, coinciding with a 21% price increase. These strategic stablecoin movements show investor sentiment that can boost Bitcoin's performance. Recent data supports a potential rally, with significant USDT transactions to centralized exchanges like Binance and Kraken. Bitcoin ETFs have also seen rapid inflows, surpassing $20 billion in 10 months, outpacing gold ETFs' growth. Krueger views the ETF's rise as legitimizing Bitcoin within mainstream finance. The combination of Tether's expanding stablecoin supply and rising ETF inflows could help Bitcoin push past key levels, setting the stage for another rally. As we conclude, what do you think is the most significant factor driving Bitcoin's growing adoption and investment potential? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.